Okay, Hubertus, we're live. Welcome to the podcast.
Hi, Jake. Pleased meeting you.
Thank you so much for your time. So first is a shout out to Max Hillebrand, who came on the show recently, and he jumped into my Telegram DM and said, Jake, I found someone I would like you to interview. And it was yourself, Hubertus. So thank you, Max, for that. And the episode with Max is not so long ago. We covered some great basic Austrian economics topics that I always love because it is a field of study that I only found later in my life because of Bitcoin. And it helps me to see the world in a clearer way. And so, Hubertus, how long have you been studying Austrian economics, and how has it helped you with decision making in your life?
Oh, yeah. Well, I studied economics, so this is one of my majors many years ago. And I studied it in Austria, but the funny thing is in Austria, almost nobody teaches Austrian economics anymore. Yeah, so the
Wow.
universities are pretty much all state owned. And so what you learn is Keynesianism, which is how I left uni. Yeah. But I was then hired by Citibank International, and worked essentially in the Eurodollar banking system for a couple of years in the 80s, 90s, 80s mostly. And starting there, I started to realize that some of this stuff which is being taught doesn't really fit to reality. So that's when it started. But I really only fully embraced Austrian economics when I started to build prediction markets in the 2000s. So we built an early prediction market in 2004 called Red Monitor, which was dealing sort of with real money. I decided then that that's not the right way to approach prediction market, that it had to work with virtual, let's call it play money, to produce correct results. And so that's when when I started to dig deeper into market processes and how they worked. And obviously, once I came across Bitcoin, which was around the 2012 mark, I was naturally interested in it, being an economist. And once I started to delve deeper into it, it all clicked and made more sense than before. Yeah. So that's about the path. I dropped out of
Awesome.
Bitcoin, I have to say, in 2015, because
Okay.
then so to say Bitcoin didn't fully make sense from an Austrian economics point of view, but that's a different story.
Well, that's actually precisely where I wanted to take the conversation. I did some research the last couple of days with the work you're doing, and Max shared some links with me, and it was very interesting to me, some of the points that you make. So perhaps to keep things very simple, when you had this realization in 2015, why does Bitcoin and the Austrian lens not work from your perspective in 2015?
Let's just stay with the economic thing, and I think Austrian economics is fairly clear about it, so this shouldn't be a surprise. But Austrian economics essentially teaches that you need a fixed amount of base money, and that also Hayek said that, Mises said that the banking system is what stabilizes the value of a money through the issuance of bank money, as it was called at the time. Now, there are various types of bank money, so it gets very complicated very soon there. And the simple message is that base money needs a fixed quantity. Yeah, and that's very well known in Bitcoin space, but somehow it got lost. That for the economy to work, a modern economy to work for division of labor, as it's called, you also need that elastic layer of currency on top of the money. Now, there's a lot of confusion of terms, but essentially that's it. But what you need a fixed amount of money stock, and you need a currency for trade and industry, because that's what trade and industry works on, and a breathing, elastic credit money layer. Now, the problem here is, and Austrian economists have always criticized it, that there's a lot of things wrong with how that's done. I hope I was able to get that through across. So you
Yes,
can
yes,
do
please.
many, many mistakes in building a credit money layer, especially if it's not really a credit money layer, but something which Austrians call fiduciary media, which is a form of money substitute, but a very bad one.
And so, taking that one step further, would it be the case then that Bitcoin cannot survive without an elastic layer of money on top?
Yeah, I mean, here everybody's guess is as good as everybody else's. I think so personally. Yeah, I'm not 100% sure. I know there are people who say fervently, no, it can just survive as a store of value. If I had to bet against it on a prediction market, I'd say, I don't know, 2/3 that it can't survive, 1/3, yeah, maybe it can survive. But the point really is the money's utility is to be a medium of exchange. Yeah, everybody knows that. It's the primary purpose of money. Yeah, we facilitate exchanges. We make sure that a medium exchange is there so that if somebody has goods to sell, they can be sold. Yeah. And before they spoil, because goods for sale, they spoil, they go out of fashion, they go bad, moths eat them, mice eat them, cloth gets holes, yeah, fashion goes out, computers get outdated. So if you produce something, you got to sell it. And so it's always necessary that there's medium of exchange, and that's the function of money. And the other things which are on top of it, which are called the secondary functions of money, like store of value, and unit of account. I guess we all know that in Bitcoin space, they're kind of secondary and they are slightly misunderstood. Store of value essentially used to mean in economic debate and in Austrian economics that you just keep, so to say, an honest exchange rate of what you got your medium of exchange for and what you get for it once you exchange it back into goods and services, thereby making the real goods exchange complete. So that was the original, or that is the idea. And this has recently, since after 2015, remember I dropped out of Bitcoin in 2015, it's got quite distorted into essentially equating the store of value narrative to that of an appreciating financial asset, where we expect capital gains, which is not, so to say, part of the medium of exchange. If you want appreciating value, try an investment. Yeah, they give people your money to use productively, be it as equity, be it as debt. But other people need to work with it. They need capital to build factories or to buy supplies, to do marketing. Yeah, so they need to work with the money, which is represented by produced goods. To create future value, which you then can buy with your Bitcoin. So that's the story
in that
behind
sense, a sound money is very much more the kind of what's the right way of saying it? The oil that makes the trade function. I absolutely buy Bitcoin for capital growth purposes over and above anything else. Yes, the counterparty risk is significantly lower, in my opinion, to other areas that is significantly higher than people realize. But it's still like the reason I buy Bitcoin predominantly is because I believe it's going to increase in purchasing power. And actually, this is the first time that anyone has taught me that the reason it was described as store of value historically was just to retain value, not necessarily a capital growth play. So that's actually fascinating to me. And one of the reasons I love Bitcoin podcasting is I'm always trying to make sure that I've asked every question I can. Yeah, is Bitcoin going to fail? Why? And I have yet to find a good reason why it won't work. And hence I'm so interested in it, and hence I keep buying. But that's a very interesting insight. Another area that I heard you mention in the research I did today is shout out to Jeff Booth, who's been a guest on a few podcasts of mine, but this idea of like forever deflation brings abundance and therefore solves all the problems. And actually had a really interesting critique of that with not just like, oh, I'm not sure if that's correct, but then a great example as to how an economy functions and essentially goes bankrupt when there isn't an elastic monetary layer on top. Now, it's not very easy to do without your slides, I admit, but just at a very high level, could you talk us through why you think a pure deflationary currency without an elastic layer above would really struggle as it gets to like second and third kind of derivations of the initial trade.
Yeah. We only have 1 hour, right?
Yeah, we do. Sorry, Hubertus.
So let's take it in steps. Yeah. What needs to be extremely precise. If you read Jeff's book, and I did,
yeah, I have, yeah.
he really only comes to the monetary question almost as a by note in the very end of the book. Yeah. So most of his book, he doesn't actually write about monetary phenomena. It's not his original topic. His topic, and he does that really well. So we also had him as a guest at the Hayek Institute remote once to debate this. Is he shows very nicely how technology can improve productivity, get goods cheaper, better, and all these things. Yeah? The confusion starts when we call this deflation. Because deflation is always and everywhere a monetary problem. It's a slight modification of another saying. Same is true for inflation, by the way. Friedman said that. So when goods get cheaper, those prices tell us something. Yeah, that we can use this product more, that it's a good thing. Whereas a deflation doesn't mean that the goods get cheaper. It just means that the money gets more expensive, which is an entirely different thing, although it expresses in exactly the same way. Prices would be lower. Yeah, do I make sense?
Yes, you do.
Yeah.
And it's
so
also that differentiation as money as a good. You know, a lot of
Yes.
people don't even really understand that money is a good itself, and that's a very important fact as well. Okay.
When Jeff talks about deflation, what he means is falling prices for goods, at least for goods, and we need to be aware of that, of some categories. Other goods will get more expensive. Yeah, like land, as we grow more of us, land in Byron Bay, where I understand you right now, is getting more expensive because
Yes.
it's scarce. Everybody wants to live near the ocean.
Is.
Of course, there's scarcity. It's always going to be there. So it's really just an exchange between stuff which gets cheaper and stuff which gets more expensive because the supply is limited. Yeah, it's a very human work will get more expensive. We all earn much more than we did at the turn of the century. Why? Because work is getting more expensive. Yeah, personal services. So it's on the good side, it's very differentiated. On the money side, to Keynesians, it looks like it's more universal. So the value of money rises, therefore the prices go down, deflation. But that's also not true because even that deflation reaches you in a kind of reverse Cantillon effect to those who those products which are first affected by the money which people don't spend, which they save, which they hoard and hold instead of spending it for the goods which were produced for it. So that's the difficulty here, distinguishing between falling prices of goods because of better, cheaper production of goods, or falling prices because of undersupply of money. And here's the problem. Now, Bitcoin has a fixed supply, the base money, which is a good thing. Yeah, it's important to understand that it's a good thing, and we call it outside money. And then there is the money which is actually needed by trade and industry, because trade and industry always runs on money substitutes, which could be either credit money, which is good, the proper stuff, or it could be fiduciary media, which is bad. Credit money is backed by proof of work. Yep. Somebody has already produced goods, which they put into the trade and production cycle for other businesses to work with and ultimately to sell to the consumer. Or it could be fiduciary media issued against thin air, government bonds, Lombard of stocks, even money issued against cryptocurrency or even Bitcoin is fiduciary media by the Austrian diction. So it's a bad thing. It will inflate the fiat system. So yeah, that's the reason and so to close it, whenever we have monetary deflation, meaning there's not enough money for people to sell their goods, to pay their workers. Those are terrible, terrible parts of the human history. It started first time around the 1400s, 1465, with the so-called Great Bullion Crisis, where people in Europe didn't have enough gold, to pay for commodities, for grain, for milk, for anything. So the farmers couldn't sell the stuff. The harvest rotted on the fields. The cows, I don't know how you call it in English, but they bowed for pain because nobody milked them because there were no farmhands to pay. There was hunger epidemics in Europe at the time. And despite there being cows, despite there being milk, despite there being grain, it rotted on the field because there was no medium exchange, because medium of exchange was just gold, and progress was too fast to keep up with that.
Wow.
So people starved, and that was probably the most comparable deflation to what would happen with Bitcoin if there wasn't already the fiat system, which doesn't have that, and therefore the economy still works on fiat, and we're not making progress on that. So that's so to say monetary deflation in a pure form. And later there were government-induced monetary deflations, like the Great Depression of the 1930s, when central banks, central planners, which, as you know, Austrians strictly warn against, interfered, artificially raised interest rates to rates where businesses couldn't afford any money anymore. And the same thing happened. You get a so-called deflationary spiral, where the marginal businesses drop out because they can't afford the interest, where indebted businesses drop out because they kind of relied on credit being normally available, but it's not because government interfered. And so the business world goes into a downward spiral where productive capacity disappears, unemployment rises, hardship, misery. We all know the 1930s. So that's monetary deflation, as opposed to better prices for certain goods which profit from productivity improvements.
And Hubertus, what is infinitely fascinating for me as a non-economist, but as someone who has capital and is an investor and is very keen to keep their capital, right? I've made bad investments and I lost it, and we as investors get paid for our decision making. And like always, I find these moments so fascinating in that I'm getting information for the first time that helps me see the world in a superior way to before. And that's literally it, right? That's the game. If you can get this information and it helps you to see what's going on better than anyone else, you can make better informed decisions.
Absolutely, yes.
And so, Hubertus, what intrigues me here then is a term that very much came up today, and it's something I've looked at in the past, but I haven't, I admit, completely delved into, but the idea of free banking. And that would be a cool direction to take this conversation next, where it's like, okay, if the Austrian school is a proponent of a fixed base money supply, then how does the rest of the economy function when you need that elastic supply of money on top in some senses? And this is, I believe, where BitCredit comes in, and we can get to that as well if you want. But it really hit me hard. It's like, actually, if you did massively deregulate the commercial banking industries that exist today, and I could become a bank, and I happen to know that my producer is excellent at his job, and I'm totally willing to supply a line of credit to them to do some work in order to get paid later. Or equally, my editor is absolutely excellent, like skilled labor in that sense. Or equally, any business that has supply chain partners that understand each other better than any central planner sitting in a bank somewhere in a main city. It's like, do you know what? I'm going to front you the cash for this, and we'll settle later because I know you're going to supply what you say you're going to supply. Now, if they're wrong, they lose, and it's on them. But it seems like such a good point, right? It's like, oh, well, the entrepreneur, like the human action, the individual can see the opportunity. Why wouldn't you want to promote the ability for that person to take that opportunity? And I'd love to hear your take on that, because it does get me very excited when I think about, we're so warped in a way. It's like, oh, there's allowed to be one central bank, and then there's like a handful of huge commercial banks that sit next to that, and that's how it is, mate.
Yeah, exactly. Yeah, this is a very valid point. So free banking, or let's say an improved form of free banking, um, is part of the solution. And as you said correctly, if one business produces something, particularly if it's part of a supply chain, yeah, you are a cotton field, who needs somebody else to produce textiles, who needs somebody else to produce T-shirts, who needs somebody else to print Bitcoin logos on the T-shirt, yeah. You know that there's a chain of mutual dependency, of collaboration, division of labor, yeah. So everybody wins along the chain. So if the cotton producer who put in already the work to grow cotton gives, let's say, 2-3 months of trade credit to the producer of textiles, yeah, it's in his own interest if to grant this trade terms if the textile manufacturer, for instance, cannot afford for liquidity reasons to buy the cotton outright and pay outright in Bitcoin, in gold, or whatever, which is actually always the case for economic reasons. Yeah, so trade essentially between the first producer and the final consumer always works on credit. Yeah, credit being capital in that sense. So somebody has to, so to say, forego immediate consumption, yeah, in order to produce something of a higher order good, as we call it. So trade credit is something very natural, and as you said, these people know each other. Yeah, if I'm a cotton producer, I know what's going on in the textile industry, and I know what the demand for T-shirts may be. So it's in everybody's advantage to grant this. And what happened was that the banks, so to say, sneaked into this to say intermediate that trade credit by producing credit money against it, which is a good thing because it powers that trade cycle. But the problem was that then there was the central bank monopoly. I mean, there were several problems, but the main one was that the banks were ultimately forced to use only central bank monopoly money for that instead of being free banks, which you just referred to, where they could print their own money. So that all of a sudden gave rise to essentially a Soviet-style central planner in the middle of a market economy who could decide who gets money at what price for whatever monetary policy they happen to have in their politicians' minds. So that's the problem, how banking and central banking started to get into this supply chain. And today we have a situation where the fiat money system essentially blocks something like 2.5 trillion of international economy because of their rules, because of the bureaucracy, because of so it's all stuff which cannot happen in terms of trade, which makes everybody poorer. And the worst thing, it makes the poorest of the poor countries poorer, because it's usually the banking systems and the monetary systems of the really poor countries which block this process. So, which means in those poor countries, people can't grow their businesses, they can't give work to people so they have an income to spend, which means the GDP per capita stays low. It's a real bad thing happening there.
And so, Hubertus, what is the answer then? If we are bullish on Bitcoin for the simple fact that its properties as a digitally native peer-to-peer money are so obviously a 10x on the status quo. And again, as an investor, this is a technological game changer. I can send, store, and receive money without anyone's permission, and it works. And it's been working for over a decade, and will continue to work for probably a very, very long time. And the idea of opening a bank account and all the KYC that has to be done, and then all the fees that are involved, it takes longer, it's more expensive, and it's harder. It's like, well, this is obviously a better technology, but then it's like, how do we recreate some of the other solutions that are already good, but on top of this new thing? And that's where I'd love to teach me about BitCredit and the business that you're building. I watched your demo vid today about. Yeah, well, it was so interesting to me. It's like, okay, how does this work? It was Wildcat 1, and you were talking about apricot brandy, I believe.
Yes. One of my favorites.
And Yeah, and you had an apricot brandy producer, and then you had a mint, and you were using promissory notes, and it was just, yeah, and there's eCash involved. It's awesome. It's absolutely awesome. And I suddenly go, oh wow, what a fundamental flaw in a fixed monetary supply to have A, highlighted, but then B, maybe let's think about a solution. So please teach me about, when you first were like, oh, I've got to do something about this.
Yeah. So thanks for mentioning the video. It was, so to say, first. It was really exciting for us, yeah, because we knew since 2015 that this was required. We actually discussed it openly, both at the Bitcoin Austria meetups, where we had a presentation in 2015. And funnily enough, now 10 years later, tomorrow I'm going to have the presentation. Guys, here's the system. Now, how
Cool.
can we get this going? Yeah. But there was a period of 8 years in between where I didn't do anything because, okay, somebody will do the work, right? It's so logically what's missing. And then it went all different direction, went SOV instead of medium of anyway. So 2 years ago we started again. So what does it mean? It means that if a merchant, and in our case the apricot seller, those apricots don't last long. They don't stay beautiful for long. You're talking a week, 2 maybe. And if the brandy manufacturer has all the brandy manufacturing machinery, he did all his investments, he still needs apricots. So in the video which you mentioned, Mario, who's the apricot brandy producer, asked me, hey, Hubertus, I was the apricot producer on Apricot Hill. Can't you give me trade terms on this on your apricots? Yeah, I can produce my apricot brandy in 2 months and sell it, so I'll pay in 2 months. And I said, well, why not? Nobody can eat the many tons of apricots which you just harvested, so let's sell it to the man, and I'll wait two more months. I've been waiting a year for the harvest, so why not? Yeah. So he gives me this bill of exchange, a promissory note, which is the simplest form of bill of exchange. But BitCredit protocol does anything. So the nice thing about BitCredit protocol is that within 1 minute, you can enter the system. It's just a URL. It's unblockable. It's a PWA software, which, progressive web app. I don't need to go into any app store. They would absolutely block us. And can start filling out electronic bills of exchange signed by your electronic signature, which are absolutely reliable because they run on a state chain, which tracks who owns it, who issued it, who is liable to pay. Yeah. So in that case, it's Mario, the apricot brandy manufacturer, who's liable to pay me in 2 months. So that's the first step. So I'm waiting. If I did do nothing now with the bill of exchange, I just send in 2 months a very specific taproot address to Mario, a BIP60 address, pay to contract, if some of you may know that, which proves when Mario pays that he paid exactly for my bill of exchange, which was in exchange for those apricots, real value. So that's the simplest case. But Mario could also pass it on to his suppliers, for instance, to somebody who sold him a distillery machine, to pay him for that, which is called endorsement. Yeah. Or he could sell the bill of exchange at a discount to somebody who has liquid Bitcoin and has no use for that for 2 months, to get immediate liquidity. That's the basic thing. And now the innovation and how a modern economy works, it's much better. Because when I, as the seller of the apricots, now hold this bill of exchange whereby Mario promises to pay me in 2 months, I can actually, in the old days, I could discount that, which meant I had to go to the fiat system because the discount house had to go to the central bank to get banknotes, and it's all very complicated. And now I can simply send this to a BitCredit mint, which does nothing but snipping that bill of exchange, which is easy in electronic form, into little bits, which are transferable, negotiable it used to be called, in smaller parts, we call it divisible, and in fungible parts. So it doesn't actually matter anymore whether Mario issued it or somebody else issued it who produced apples or somebody who produced steak or whatever. So for that, we use cashew technology, which is a very simple Xiaomi Mint. Some of your listeners may know that already, but just in short, Xiaomi Mints are, so to say, a big hope for Bitcoin because they enable Bitcoin-denominated payments, which are instant, absolutely free, and completely censorship resistant, because nobody knows what's in there, so nobody can censor you or lock you out. Which today still have a big horse hoof, as we say in German, Pferdefuß, a problem, which is they are today custodial. Yeah. So with credit money, we are currently working on a non-custodial version of that, which means that anybody can spin up a mint in a couple of minutes if they want, and use a BitCredit wallet, for which there's already a prototype, to pay with the stuff. Instant, free, global, absolutely scalable to infinity. There will be absolutely no scalability problem on Bitcoin anymore.
Wow.
Yeah, sounds very nice, but as I said, we almost we can demonstrate that already, and we're still removing that that big problem actually, which is the fact that mints today are custodial. Because as long as they are custodial, governments can get you and ensure that their fiat money monopoly retains, so that they can distribute the bad money to finance the deficits.
So Hubertus, to stick with the kind of the business example, so you've got a primary producer of a crop. That crop has a life, like it's, you want to be brewing your beer at the best time. You want to be making your wine at the best time. You want to be making your bread at the best time. The bread or the winemaker, the baker, they want to buy this stuff at specific times, but it's easier to put in place a contract between the two instead of actually passing the bearer asset Bitcoin. And because of the parties trusting each other, that works. And once the producer has got that bread in hand, they can then either disperse that value by selling it, or they might have, as you said, a manufacturer that's loaned them a machinery or something, and some of the proceeds have to go to them. You can see it, like, the point is each economic actor needs to make the best decisions for themselves, and this just helps you do that. So the crop grower in the first instance, forgive me as I just think this through out loud, they've got their apricots, and now that they have this IOU essentially from the apricot brandy producer, what you're saying is by the use of the cashew technology, you're able to actually then basically homogenize that pristine credit because it's backed by actual apricots, and then they can be traded.
Yeah, so the enhancement of that IOU, as we call it, happens at the BitCredit mints.
Yes,
and then it plugs seamlessly into cashew.
Right.
With the eCash being produced by that process. So there's the new process of IOU, which is available. There's the new process of minting, which is available, but still custodial. And then there is already the cashew technology, which we modified slightly in a fork to deal with that. And essentially, we're running the prototype on a cashew wallet, and now we are developing a different wallet because, so to say, we think it will change the paradigm how we pay in the future.
It's a very, very smart use of a different set of tools that didn't previously exist, combined together to basically unlock equity in a value creation network that wasn't previously accessible.
Yeah.
Wow. How cool is that? What are some of the ramifications of this, do you think, Hubertus? Like, obviously very early days, you're doing prototypes, etc., but huge potential market, right? I mean, it's basically every supply chain you can think of. How does this play out, do you think?
Yeah, no, look, here's the thing. This of course is cool. It's all good fun. And in theory, it could solve the volatility problem to make it work. Now, we are faced, however, with a chicken and egg problem. Yeah, because while Bitcoin is so volatile, it's very hard for producers to hold still for 2 months. Remember, businesses have a certain margin. In some industries, it's a very tight margin because it's a competitive industry. Yeah. So if the fluctuation of Bitcoin is higher than that margin, it essentially catches them out and they go bankrupt. Just like companies went bankrupt during the Great Bullion Famine in the 1465s, yeah, in the 15th century.
Yes,
yeah,
okay.
so that means the productive capacity of the economy would immediately shrink and we'd all suffer because there's less abundance. There would be scarcity of apricots, which is a absolute horrible thing. Life without apricots, obviously. So that's the problem. So the volatility, which can be solved only by this thing, is cannot improve because it blocks the adoption of the thing. So which means it's a very hard job. And so to say, what we are right now doing is we are speaking to Bitcoiners who are in touch with the business world, because we are early. We need to test this and harden this software with very small use cases, but real ones. And the idea is, if the software is nice, and can be spun up in a couple of seconds, like the BitCredit wallet, you can essentially spin it up in 30 seconds. The BitCredit core, which produces those e-bills, you can spin up in a minute. There's even an incognito mode where you don't need to enter any data about yourself, because it uses the so-called bearer bills, which are enshrined in all legislations worldwide. Anyway, so it's a very fast thing, but it needs to be extremely smooth, because when will be the moment where this has a chance to catch on? I think it's when a country breaks down. Like Greece, when the EU, so to say, blackmailed the Greece government into accepting the austerity measures of the EU troika and shut down the euro supply for three weeks. Lebanon, when central bank essentially depleted their monetary reserves, and all of a sudden people had a shut down banking system. Cyprus, when the government shut down the banking system to steal money from people's accounts. Zimbabwe, Venezuela, you name them, they're all there. There are these countries where governments abused the monopoly power for their own purposes. And I think this will increase. As CBDCs come on stream, there will be more acts of repression and outright theft by various governments. So we hope that by the time BitCredit is stable enough and tested so smoothly that it can essentially be spun up in next to no time while this crisis lasts, before people's goods spoil.
And I'm definitely of the opinion, I've said it before, but Bitcoin's product market fit is strongest where financial services are worse. So if you're like myself and you grew up in the UK, not necessarily going to be the petri dish of Bitcoin adoption. Whereas any of those countries you just mentioned, where it's like, for example, I've had people on my show that grew up in Venezuela. They're like, it doesn't take 2 seconds to be like, no, Bitcoin's really, really useful. Figure out how to use it. One thing that strikes me as similar is futures markets and the idea of derivatives. And when I think about a farmer is growing his wheat and they want to think about the harvest a year from now, and they want working capital in their business today, or they want to try and cover their downside risk in the future, then there's a whole marketplace for selling forwards. It's very, very different what you're describing to a futures contract. But is it similar in any way?
You're correct that, so to say, farmers have multiple problems. And so to say, one of the problems, correct, is that they don't know the price of wheat, of apricots in a year. And so for their own planning, of course, they could use the futures markets or the options markets for that. So that solves that problem. BitCredit solves the liquidity problem. That when they have goods, they need to sell them fast. So it doesn't help if people, like in the Middle Ages, sit on gold and hoard it under their mattress, or put it under the earth in their garden, because then the farmers can't sell anything. And it's the same with Bitcoin. Bitcoin in the last 10 years has gone, I would say 75% of people only hold it for NGU, number go up, for as an appreciating investment, instead of doing it for medium of exchange. There are these people, thank goodness, in the ecosystem who say, yes, spend your Bitcoin by all means. You can buy it again, but spend it so that the trade circle goes around, and that it's proven. I mean, we have Bitcoin Pizza Day in a couple of days, in 20 days, 15 days. The importance of Pizza Day is so. Why is it so big? Because it was for the first time that Bitcoin was not used for any old financial juggling. It was paid for real goods. Yeah, and that's when people started to realize, okay, this could be medium of exchange. Yeah, and if you think of Ross and I mean, Silk Road, no endorsement, but it was real economy business. Yeah, it was real goods produced, being shipped and paid by it. And for Bitcoin, there was a good thing. And again, I'm not saying anything about Silk Road, but yeah, it was important to show that Bitcoin could work in special use cases in the real economy. It could also work. It will also work in normal use cases at some stage. But the conditions to make that come about need to be just right, and we need to be ready. And that's why we are currently really hoping to find Bitcoiners who have a contact to a company who wants to try this out in a real economy, in a trade and production chain, where not only a merchant accepts Bitcoin and then converts it into fiat to pay his suppliers. No, that the merchant, uh, instead of just accepting it, maybe with some machine which is under the desk and collects dust, but really accepts Bitcoin and then tries to pay some supplier of his, maybe just for a small part, but to pay him in Bitcoin. Yeah. And Orange built and the next order of the supply chain to so we can figure out at Bitcoiners what's necessary for that to happen. It's going to be very hard, but it has to happen.
It made me think it would almost be helpful to find a Bitcoiner that owns multiple businesses in the same supply chain. Right?
Oh yeah, then he just needs to convince himself to try this out. Yeah.
Do you know of a guy called Ben Gunn?
From ARK?
Ben Gunn. No, Ben is based in the UK, and he has a property in Wales, and he bought it maybe 5 years ago, and he's become a forestry guy. So he literally fells timber, and the timber, he's built a vertical supply chain where he now has a whole warehouse where he's basically taking his raw material and he's shaping it into products for housing and things like this. So that's the person that came to mind for me. I think he's one of my first 10 episodes for this. So you could dig it up and have a listen to what he talks through. But he's based in Wales. I can pass you his contact after. But he's someone who's a decision maker in the top of all of it, where he might be able to actually run a prototype through each business and see if it actually works/helps. I'll be very happy to make that connection. It's fascinating, isn't it? Because even when I think about the framing that you just helped me understand, which is that the producer of a raw material has a price problem in the future, and that's what the futures markets or the option markets help to deal with. But actually what you've described is the liquidity problem. It's like, well, you want to sell it right now.
Yes.
Well, what happens if your preferred buyer doesn't want to buy it right now because they haven't got any money? Like, hello, it's an obvious area where you're like, how many more deals could be done that aren't currently done? And it just really blows my mind, making you or forcing you to think about money as a good itself.
Yes.
And if there's not enough money circulating through all of these trades, then you get problems. And so what are the chances then, Hubertus, of a deregulation of the banking system and something more akin to what we might think of as free banking, where you might have would it be the case that literally anyone could print their own money on top of Bitcoin? And you might have it anchored to Bitcoin in terms of the initial credit layer. But then obviously if you made a bad decision on who you give your credit to, then you're wiped out, right? How do you think that might work in an ideal world? Like, just paint a picture for me as what you might like to see.
Yeah, I think as long as we adhere to this principle that currency, can only be issued against goods which go into the production and supply chain. Yeah, which means it's always backed by things which need to be sold.
The raw material itself.
Yeah.
Okay.
So as long as nobody gets the crazy idea to issue Bitcoin denominated money against government bonds, yeah, or I've also heard lightning notes with negative naked capital with no reason, with thin air. It's a bad idea. So as long as this money is issued only against goods and is being issued by another business which commits to pay in 2 months, in 3 months, in Bitcoin, on main chain. Yeah. So to say, nothing can go wrong. So the educational task is to educate people that this is the only way in which a good currency according to Bitcoin standards can be produced. And the other difference to free banks is governments couldn't interfere themselves. Yeah, those had physical presences. They had directors whom the governments could catch. And so to say, impose on them to give them credit for their budget, for their deficit, for their wars, for whatever. And that's exactly what they did. They said, produce money against these war bonds of mine, please, right now. So if the free banks can do that only against commercial credit, and it's not banking anymore, it's more a technical process to snip those IOUs into smaller bits with which anybody can pay eCash style. So there doesn't need to be any regulation for that because it's all, so to say, automated, systemic, smart contracts effectively on Bitcoin. So no, I don't see any chance that they will change the regulation. It will be a hard fight once we've created facts to get the political system to accept that this is the new world, with non-censorable money, which is fungible again, which can be used all over the world without one nation state having to fear that another nation state will debank it, essentially. So this will be a true global money where nobody really has a say because it's fully decentralized and non-custodial. Yeah. So that's how I see it coming.
Cool. And so one thing to reflect just from my perspective is when I have got closer and closer to Bitcoin over the last how many years it's been now, I feel a strong sense that it's being able to sit alongside people like yourself, Hubertus, who are clearly, experts in your field, actually building things to solve problems that you see. We haven't had a chance to chat through what it was like working with Citigroup in the 80s. We haven't chatted through what you did in prediction models or prediction markets for however long, but like this huge depth of expertise, and you're building on top of Bitcoin. And so if I make an allocation into Bitcoin, I'm also able to just kind of align myself with the bet that you're also making, which I love that. It's such a cool thing to be able to do. Thank you very much for sharing all of this today.
Yeah. No, thanks for having me, Jake. It was really
that's my
interesting
pleasure.
Information.
Hubertus, the final question I've got for you then is really so we're in 2025, May has suddenly appeared. What are we looking at over the next 6 months? Is there going to be anything in particular you're keeping an eye on, or what gets you excited about the second half of this year?
Well, the thing I'm most excited on is to have a fully functioning version of the system ready in all its components, parts, with a cool UX, which is absolutely smooth and fast and allows immediate onboarding. Yeah, we will be founding a first, we call it reference mint, which will put the whole process up into the public domain so that anybody can spin up a mint in however short time that he wants, and smooth it out with at least 5 businesses who are Bitcoin friendly and manage to convince the supply counterpart to do this at least for a small part. Yeah? So if we get that, I think we're in a very good shape for the next time when there is a fiat crisis or banking crisis somewhere.
And sorry, Hubertus, I have one more question. The business is registered in Europe somewhere, and like you have a registered business. Are you guys just prototyping, or not even at that stage yet?
No. It's
a protocol.
No,
okay, so it's
a protocol. So it's just it's just an initiative, a project at this moment. But we decided that for the first mint to operate this thing, we wanted a legal vehicle because it would need to be able to, if somebody doesn't pay a bill of exchange, to go to court. Yeah. So that's why we wanted to have all the possibilities. So we're founding the first vehicle in Switzerland, which is the most, so to say, democratic country in the world, and therefore the most neutral on these matters, and have an official mint founded there to use the protocol software, tell everybody how it's to be implemented, how it's to be run, what is the best practice, and document it into the public domain. BitCredit, of
Very
course,
cool.
is completely open source, free, and so whoever wants to can do it. I think there will be hand-holding needed now for this first 5 or 10 businesses. So, and the project has enough people who can support businesses who want to try this.
Well, Hubertus, listen, we'll wrap it up there. Thank you so much for your time today. I really appreciate it.
No, thanks for having me, Jake, and thanks for liking the protocol. Thanks.
If someone wants to reach out and get in touch, Hubertus, what's the best way to contact you?
Well, the easiest at this moment is to just join the Telegram group. It's Bitcoin_community. So that's where you get everything firsthand, first time. Otherwise, simply follow on some of the social media we're running. The main accounts are on Nostr and on X. You can find the Nostr and pub on our Twitter account, or just follow the Twitter account.
Hubertus, thanks so much for your time today.
Thanks for having me, Jake. Goodbye.